2024 election could be a key risk for markets in the second half of this year. Just this summer, we got a packed schedule. Trump's sentencing in his New York hush money trial on July 11th, the Republican vice presidential selection coming up on July 15th, and we've got the second presidential debate set for September 10th. So how should investors be preparing for all of these key events? Joining us to discuss, we've got Lisa Thomas, TD Cowen's Deputy Head of Research. Lisa, thanks so much for being here. I know in your list of mid-cap ideas here, you have a section zeroing in on Washington policy for 2024. I'm curious, from the perspective of you and your colleagues, which candidate could potentially fuel more gains in the mid-cap space given the potential policies that they could be putting in following November 5th?
That's a great question. But what I will say, Madison, is what we have been really focusing on are the names and on the themes that are really going to endure regardless of which party and which candidate takes the White House and takes Congress. Because as you point to, there are a lot of catalysts between now and the election. There's going to be a tremendous amount of noise in this cycle. I get to use my favorite expression, which is this one goes to 11 on a scale of 1 to 10. So I would say, in fact, we're really focused on investments and on themes that are going to have that long cycle durability to withstand, the whipsaw, regardless of who is in place. Because on those themes, we think, in fact, there is a tremendous amount of bipartisan agreement. If you're talking about things like U.S.-China decoupling, if you're looking at U.S. protectionism and industrial policy, and by the way, deficit spending, because despite the rhetoric that you might hear on both sides, what we think is that you are very unlikely to see lightening on defense spending at a time when we are seeing such geopolitical risk on so many fronts. So rather than really focusing on which party is going to, be, I think, the best driver for mid-cap stocks, we would argue there are a lot of great mid-cap opportunities regardless of who's in the White House.
So what is the thinking that investors should try to adopt heading into this busy cycle in order to not get spooked by the noise, as you call it?
Yes. Look, again, I think it's really focusing on those long-run themes. So if you're looking at industrial policy, certainly AI is, on everyone's mind and on everyone's lips. And we're looking more and more at those second and third derivatives of AI use cases. But in the meantime, we're putting tremendous focus on AI infrastructure. What are all of those, architectural enhancements and improvements that are needed to really fuel the AI use cases that everyone's looking to? So, for example, we upgraded Credo Technology, which is a mid-cap name in the space that is working on enhancing speed in the data center. They had previously had a lot of customer concentration between Microsoft and Amazon, but that's broadened out a lot. And we think that investors are increasingly starting to embrace those kinds of infrastructural names. DigitalBridge is another name that supports hyperscaler data center operators with a portfolio of companies in that digital infrastructure space. We think increasingly by looking at names that are really tied to those long run themes, then you get to steer clear of the noise. You get to see what happens, just as we all are, because certainly, particularly coming out of last week's debate, the endless headlines, the endless noise. We don't think that you're going to win in investing by getting caught up there. Focus on what's going to matter regardless of who's in the White House, regardless of who's in Congress, and what's going to matter with some real durability over the next several years.